Welcome back. We got tons of stuff to talk about today, from GDP to PCE to a potential rate hike in Japan tonight. All that and much more on today's episode of Money Never Sleeps. And welcome back to Money Never Sleeps. I felt like an orchestra conductor there, trying to get the live stream going on, think of something to say, and also get the video playing. But, that's all thanks to my co host who is not here today. He is putting a spoiler on a pickup truck. But my next guest needs no introduction. House, thank you for being here today, for filling in. We got a huge day, tons of data to talk about, and tons of farts to discuss.
Yeah.
We've pretty much become the number one place on the internet for fart coin, shilling, I would say. Again, nothing we say is financial advice. Anything we say on the show is financial advice. We're not financial advisors. Just a couple of guys like talking about the market. If you want to do anything regarding trades or investing, talk to a financial advisor. Do your own research. Has to be said. But how are we doing? I haven't seen you in a while. I'm glad to have you with me today.
Yeah, no, man, good to be back. It's funny, we were talking pre-show about how things kind of went into a lull for a second, and kind of conveniently timed. Got busy with work, life, but no time like the present to jump in. Market's volatile as all hell. No better time to just be glued to your screen and watching charts.
Oh, I know. A couple of guys who don't even fart. Yeah, it's true.
Hodl, I fart.
Never
That
have.
hot air's rising.
I'm not farting today, but this summer I might be farting quite a bit. I can't believe we're saying this shit on here. But let's talk about what's going on in the markets today. Obviously, today was a massive data dump. I'm going to pull up the market watch, some of the medium forecasts, and see how they stack up against each other. But looking at market watch today, we had ADP employment, ADP employment. I think I said unemployment, GDP, along with PCE, personal income, stuff like that. Right off the bat, the big ones were GDP and PCE. So we could see that GDP came in at negative 0.3%. Mind you, guys, this is before any of the tariff stuff came into effect. That came in Q2 is going to be all the tariffs. Q1, Trump even came out today and says that this is Biden's mess, and so is the next quarter. But outside of what Trump's saying on that front, it's kind of funny to see that it came under expectation. I think the expectation was negative 2%. And if we look at where it was previously, it was at 2.4% growth. So that's a big miss. It's not a good sign. Q2 comes in and these tariffs show that the economy is actually slowing down. 2 consecutive quarters of negative GDP growth. We all know what that means. Textbook what it means, even though I think we've been in it for a while. That's a recession. But we know that whenever we get bad news, the market likes to do the opposite. So we'll see how that plays out. We might be rallying hard by the time we're into a recession and get that announcement. But this shows you that, things are shaky out there right now. They might need to sell from a little bit higher. Looking at PCE index and PCE, it looks like it pretty much was. Oh, here it is. Core PC. That's what I was looking at year over year. Fairly high, 2.6%, still above the 2% mandate. Obviously, this isn't necessarily CPI, but we can see that things are still fairly hot in the core PCE. Month over month, I don't know. I feel like GDP was the one that kind of shows that the economy itself is going in one direction, but it's still the price of goods, the cost to produce things is still relatively expensive. Q2 is going to be the one that's going to be very interesting to watch, because you and me, I think, can both agree that GDP is probably going to be down in Q2. That's my opinion. I think everyone knows that. But when we look at core PCE, if this shit's expensive because of the tariffs, I mean, this is the worst stagflationary situation that I think this administration or anyone who would be in office right now would want.
Yeah, no, I mean, I'd agree, right? We've noticed rising CPI over the past few months, even about a year now. And so it's really not surprising to see that the PCE is starting to be a little bit negative, right? As the cost of goods and common consumer household items, whatever else is rising, there's going to be some less expenditure the longer that lasts. And now we're
Right.
starting to see that. So, I think both of us and Jweb over the past, year or so had kind of been predicting this had come a little bit earlier, but it seems like, everyone was adding some glue and some steel to the floodgates. And, I don't see us getting as hard of a landing with this recession if it comes as, I would have thought prior. Right. And I think some of that comes from what you said, right? We might be headed into a market rally, right, as the recession's officially been announced.
Right.
And, just the way that markets have been trading right now, right, we're seeing just a break from tradition, a break from the orthodoxy. So I think it's an exciting time to be in the markets and, actively trading. There have been a lot of volatility, some good scalps to be had if you're up at that alley of trading. So yeah, just exciting times all around.
Absolutely. And you and I both know, and I should know more than anyone how long a market takes to unwind. Definitely got killed on positions in those situations in the past. I think a lot of people once we hear recession, they're going to freak out, probably going to panic sell. But we know that there is so much money in these equity markets, and we also know that there's a lot of debt that's coming due. It doesn't make a lot of sense if they're selling off equities at a loss to pay off those debts. It makes more sense that, we get some type of QE. We're going to find out tonight what happens in the Bank of Japan, whether we're going to have, the yen printer going on or if it's going to be, rate hikes. Is going to pretty much lead to an opportunity, I think, for a lot of people who need to sell a lot higher to prevent a total collapse of the system, the opportunity to sell from that. So we're going to see what happens, obviously, moving forward, but we're getting tons of other things that are just pointing that the economy is slowing down. We're probably going to see a recession fairly soon. ADP and employment, the previous was 147,000 jobs. This time it came in at 62,000. So that's, cut more than in half. So things are slowing down. I think the jobs data the other day, let's see if I got that right here. It was like 300,000 or something like that. They don't have it here. Job openings. Oh, yeah. There it is. 7.5 was previous. This time it was 7.2 million job openings. So a 300,000, I believe, cut in that area. So a lot of things that are just lining up. Bad news all around. Moving forward from that, let's take a look at some stocks that have had also some bad earnings, because recently, this is earnings time of the year. We're getting everything in. Tomorrow, I think, is Apple. There's a lot of them coming up. And from the ones that we've seen so far, not necessarily looking like the greatest metrics out there for the greater economy. Starbucks reported their earnings, and they did have a pretty good gap down this morning. They are bouncing. Again, nothing necessarily telling us that the market's going to come down today, but you did see that this gap down, it's down 6.5% right now. It went all the way down to about 10, almost 11% down. Starbucks, people can't afford, as Chris Hoddle says, the $8 lattes. It's just true.
I mean, I think I've probably mentioned this anytime Starbucks got
I know you
brought
love
up on
them.
the show, right? Senior year of high school, when I started, I switched from the mocha to the cold brew, $3.15 for a venti. The most expensive of the three Starbucks within a 5-mile radius of me is now $5.65. So that's 8 years. We've gotten a $2. I mean, that's almost 100% increase for somewhere around like the 70%, 80% range. But, looking at this, and as we get further into some of the other stock charts, are you looking at these gaps down and you're thinking, okay, this is people pricing in the start of the trade war? Or do you think a lot more of that impact starts to come Q2 as Trump's saying, hey, we're still getting out of Biden's economy? Like just from just a rapid fire, right? What
Yeah.
would you lean towards in that scenario?
Yeah, I think they're putting out the forward guidance right now, and people are reacting to that. I think that the market hasn't fully felt the true effects of the tariffs, right? Because we haven't necessarily seen it in the data itself. Everyone's just trying to, again, markets are always trying to price in everything ahead of when it actually happens, because when it does happen, then it does the exact opposite of what you expect.
Yep.
So I think that at some point this year, likely at the end of Q2 into Q3, am I saying that right? Q2, no, Q3, no, end of Q3 into Q4, that's when we're going to see the major, market moves with a lot of these things in the equity market. So I think that, again, there's just a lot of people out there that think they're smarter than the market. We look at debt because debt's going to be the most important teller of when the market's going to rally, when it's going to sell off. And right now, there is kind of a window where we can see a little bit of a sell off. That's why we're seeing a lot of these bad earnings calls. But I do think that's the second half of May into June. That's when that debt could, completely reverse and we get that hard rally. So seeing Starbucks sell off here, I mean, the insiders knew what was coming with the earnings call, right? So I don't think they're necessarily positioned in a bad way for it. This is all people who were hoping for something that they didn't get, and now they're just trying to either short the stock or they're trying to offload any position that they have before it goes any lower. But again, a lot of companies I think are going to be doing this moving forward. Like look at SMCI, bad earnings once again. Similar chart, right? Just gap down and it's starting to rally up. It's filling gaps to the upside. You're not going to get this all the time. You're going to wake up one morning and shit's just going to be down a lot. And then the summer rally will probably clear a lot of these gaps. So these short-term gap fills that we're seeing on some of these stock charts, you can feel bullish if you bought down here at like $29 and it's 31. But I think that we're in a place where there's going to be a better time for entries into some of these positions, even if I think that they're shit stocks, right? I'm not saying that super or microcomputer is a shit stock. I would never buy it in my life. I wouldn't buy it with Jweb's money. But this is definitely something that, this is going to impact a lot of the trades for AI, for chips. I expect NVIDIA. I mean, this is one of NVIDIA's biggest customers. And at some point, they're not going to be able to say that, oh yeah, they're buying chips. They're going bankrupt, but they're buying chips from us. Just not going to happen.
It's the chip resale arbitrage market. Okay. It's the chip now, but before we get too far removed from Starbucks, I will just add one last thing anecdotally is they started adding back the in-store model. They briefly pivoted away from getting rid of all the tables. It's no longer like a sit-down cafe. It's get in, get out. And it looks like they've pivoted back to you can come stay. And this might just be me, but the lines have gotten longer outside and the crowds inside have gotten busier. So I don't know if that was just the last 5 times I went to Starbucks, something held up, or if that's really driving people back in the door, even among some of the rising prices of coffee and other commodities. But that's one of those things that, as we get these lowered prices, perhaps later into the summer, right, I'm gonna look back at the Starbucks price and, if that's down to like 65, 70 range, as an avid Starbucks consumer and noticing at least my local Starbucks popping off a little bit, that's probably the kind of range that I'd be considering. Same thing for like SMCI, right? And I think to your point, if chip prices keep going up, if these tariffs keep getting raised, like at what point can SMCI not afford NVIDIA's product, or do they have to broker some sort of like, hey, we got to adjust pricing for them because we need this customer? And that to me is where things start getting really shaky, is like, okay, to survive, we got to adapt to our customers' needs rather than true market supply and demand. Exactly. So obviously, just some hypothetical scenarios running in my head, but that's where I look at these gaps and I'm like, okay, I want lower to buy, but does that ultimately just ruin everything for everyone?
Yeah, absolutely. Right. If it gets to a point where it's so low, then, I think we're at a point where we're trying to save a sinking ship too. Chris, inflation still coming. Whenever the tariffs take effect, price won't necessarily go back down because businesses will hedge prices against instability. Yeah, absolutely. I mean, you're kind of seeing it with Amazon, right? Putting out the tariff prices on things that consumers will be buying. They're just going to, this honestly is just going to continue to affect the working class. Like I said in, I think, last episode, but the trade war is necessarily a trade war on the middle class and the consumer economy. None of these other countries care about this stuff. I mean, they're like, oh, don't do this to us. Oh, we're going to raise the prices. And people are still going to buy it. It just gets to the point where inflation gets so high and the labor market's such shit that people don't buy it anymore. And that's when we get into a really big pickle. For these other countries are going to start being worried. But for the time being, again, we have not seen the true data of how these tariffs will impact a lot of these goods. People are probably going to still put up with it. They're going to be pissed off. They're going to be bitching about some of these prices, but it is what it is. And again, the administration said that it reached out to China today to talk about trade policy. They say that every other day, I feel, just to save the markets for like 10 minutes. And then next thing you know, China, 300% tariff, something like that's going to come out. But yeah, But going back to Starbucks, I know we're talking all over the place. I think the reason why you're seeing that is also, and this might be something that I think a lot you probably agree with, but the lack of a third place. We see all these articles from CNBC and all these younger generations that just don't have a place where they can go. You buy a $5 coffee or something like that, and you just sit down somewhere and get work done. It's the equivalent of having somewhere that isn't work or home to go to. So
Oh,
that's
100%.
it's honestly that's what I would do if I didn't go to the library or something like that. But I think that's probably as long as people have jobs and as long as they're not kicking people out again, there's a good argument to be made that that's literally the reason why Starbucks is going to do fairly well until maybe something worse in the economy happens. So
No,
I,
like
I, I agree with you.
that's why I go to Starbucks half the time,
Yeah,
and I have to look more into it. But they do now have, like, while you're in store, some sort of refill program to keep people in there longer and drinking more coffee. So
smart.
yeah, like, that's exactly why I go to Starbucks outside of my morning coffee. If I've just been sitting in the office too long, feeling distracted by video games on my PC, it's like, oh,
Absolutely.
packing it up. We're heading to Starbucks.
Yeah, I mean, so that's what we can kind of look forward to. I agree. Like you said, 5 out of 5 times you've been there, and that's been the case. That's more than just a probability. It's most likely a possibility that people just want to be there, and it's working out for them. So earnings call, forward guidance. I think you're going to continue to see a lot of forward guidance, but then you're going to get this positivity switch going into the summer. It's again, all it takes is QE. So speaking of QE, let's look at what's going on in Asia right now. Let's pull up the yen. I'm looking at the yen right now, and once it gets up here, it's still in a very tricky spot. This blue line is bad news if it goes below it for Japan. We saw that super microcomputer, obviously, a lot of those tech stocks are ones that the yen carry trade was used to pretty much, investors are used to use the yen to benefit from stocks that were in the US that were going up nonstop. Supermicrocomputer, Nvidia, ARM, a lot of exposure to those here. But the stronger this gets, the value of a lot of these US stocks going down, that's the unwind, right? The thing is, they met tonight. I always get messed up because Japan's fucking a day ahead of us. So tonight is May 1st for them. Yesterday was April 30th for them. And it's the 2-day BOJ conference. Tonight we should get the rate hike decision, whether they hike or not. Again, inflation in Japan been going up. It's like 3.6%. I mean, it's steadily been going up for the past year or so. The yen is only getting stronger. I mean, unless they just absolutely want to have the yen printer going off nonstop and inflation just keep rising, they're going to have to make a move. And it just seems too perfectly timed with what's going on here in the US with Powell having a meeting in May and in June. So, I mean, something goes wrong in May and they kind of commit to, yeah, we're probably going to cut rates in June, something like worst case scenario, then that's our summer rally right there, right? But it's very possible that the Bank of Japan might raise rates tonight. I'm not saying that they will because we know the Bank of Japan is reluctant. It's also a proxy for the U.S. economy. So if it's if it hurts most investors, they probably will not do it. But if they can't, fix the underlying issue, then they're probably going to have to do what they have to do, and then just kind of kiss their wounds and just hope for the best. I honestly
Yeah,
think.
and that seems to be kind of at this point the common conclusion decision as the situation's been unwinding more and more, right? Like it went from what is the impact to there is no impact to okay, there's an impact, and now everyone seems to be pretty what's the word I'm looking for? Agreeable on a 25 basis point hike. It's just a
Mhm.
matter of does it come tomorrow? Does it come in June? But it seems like the consensus is before Q3, we're gonna end up getting that 25 basis point hike.
Yeah, absolutely right. And the scary thing too is if they hike, obviously, what does Powell do then? With say inflation going up, like Chris says, because the tariffs are going to be inflationary at the beginning.
Mm-hmm.
Maybe not so much in Q3, Q4 because people are out of work and they're not spending as much because they just can't afford to. This puts Powell in a very tricky position to the point where it's like even if they need to do QE to push the market up, how are they going to do it? Is Japan going to be buying tons of US debt, and then they can kind of like sneak it under the rug and just be like, here you go, banks. You can just borrow this as collateral and then just throw it into the market and then sell it off. And then someone's going to be holding the bag, but it won't be us. Very possible it's that. It could be, introduction of repo, which they did in September of 2019. A few months later, we had February and March of 2020. A lot of instances where something like that could happen that isn't a rate cut necessarily, because if inflation stays hot, they're not going to cut rates. I think that's kind of the base case. The question is, how do they keep all these plates spinning at one time? My guess is as good as probably what they're going through right now in New York. So looking at what's going to happen here, if this goes any stronger, if this keeps dropping the yen, then we're going to see a massive correction, I would expect, in all of equities, right? If this gets too expensive to borrow, they're going to have to sell off whatever equities that they got in the trade to cover any losses or any, to make sure that they can pay back some of those loans. And if that's the case, you're going to see something bad in TradFi in the US. Like, everything's interconnected at this point, right?
Yeah.
And it makes total sense. Don't mind any of my wave counts. I've been fairly accurate, but also fairly wrong on this corrective pattern. So there's an ABC I'm looking at now. I can't not see it. This fifth wave really messed me up over here. But looking at this here, you came right to the 50 moving average. You got rejected from it, and you're trading below it. You're doing that also in the NASDAQ, and you're also doing it in the Dow, except the Dow, you're using this resistance line that we've talked about for a period of time. You came to it, you didn't regain it, you're hitting your head on it. It has all the makings of one more pullback before we start to see maybe some really good moves to the upside. And again, sharp moves to the upside in some of these TradFi indexes. So that's what I'm seeing on the Japanese front and how it could impact the US. I mean, even if we look at the VIX, I said this on the last show, the VIX is ready to break out. Yeah, I mean, you can even see how much is getting crushed today, right below the 50 moving average. It wants to go. It really wants to go. I just don't know when it's going to be. Maybe it's tomorrow. Maybe it's Friday. Maybe it's Monday. All depends on what I think BOJ has to say. And, we're already getting kind of the bad news with the earnings. So let's see how the earnings play out for the rest of this week too.
I mean, I think if we're just going to continue to see bad earnings, we got to hope the market reacts like they do when Tesla has bad earnings. Just massive pump to celebrate, right?
Man, you mean Tesla? Trump's favorite? Oh my gosh. Did you see the thing yesterday where it was like, Elon makes great vehicles, but not everyone wants one?
No, I didn't, but I'm going to have to go look for that now, because that sounds like an early contender for soundbite of the year.
Everything is computer. There's so many good Trump Tesla comments. Oh my, memes from that one time he got into a what was it, a Model S or something like that? Fucking hilarious. Outside of that, we're looking at currencies. And again, I'm just going through everything with you because we have the time, and maybe tonight's a big night. Who knows? The dollar is getting stronger, but not by much. This thing could drop and make the yen even worse, right? All depends on foreign policy, Federal Reserves and central bank policy. We'll see how that comes out in the wash. Let's take a look at, I'm going to look at my bags, then we're going to look at your bags, and then we're going to end with some farts, if that sounds good with you.
Sounds good.
Let's take a look at GME. It's a very good chart, guys. It's going to be coming down, most likely. You're finding resistance on this trend line. There's a few scenarios. The Bank of Japan shits the bed, and the yen carry trade unwinds, and there is a window of weakness where there's going to be lots of margin calls. Then they could possibly have to cover shorts, and this thing could skyrocket. It's a possibility, right? We got the curve here. We're within this triangle. If I'm wrong, we're probably going down to at least it's very possible we can go to $22 or so. I think that we will test the 24, 25, around the 50 and the 200 moving average. But then you're just coiling up here, and then it looks like, by July, the decision, where it could possibly be going, will break out. We're in a massive triangle. It just is what it is, right? We're in a massive triangle there. You were in a massive triangle also here, and from 2021 all the way till January of 2024. And then you got to,
that was Roaring Kitty's return, right?
It was, yeah. Back in March.
Yep.
I've struggled with I've actually spent way more time trying to decode a lot of his memes from last year. There's someone who played them all backwards on YouTube, like compiled them, played them backwards, and like hour and 45-minute video, and it's like Roaring Kitty, The Return, the movie, or something like that. And I started watching, and I was actually getting really intrigued with it because I was like, oh, these memes are hilarious. But I spent way too much time trying to decode it. It might be as simple as in about 1 year, literally to the date, everything looks like it's ready to pump again. So I'm excited to see if the BOJ is the issue. And again, his last live stream is a thumbnail of the Bank of Japan. Like, that's the wild thing too. So maybe he foresaw this being the issue. And we know that the derivatives market is heavily toxic. A lot of institutions have exposure to one another, UBS being the one that we're most likely seeing as probably the one that's going to eat the most amount of shit. That's why I say that the Swiss banking system might be the Greece or the Iceland of 2008 this year. It's very possible that in Japan are the two. But I'm excited to see what happens, because even though we're overbought and we're coming out of that, one tweet, a couple margin calls, we got a couple of Melvin Capitals on our hands there. If that's the case, then we have to look at FFAI, which, again, I always talk about this one, went from $1.50 all the way to 164 back in last year, May 16th. And no one knew why that did that, but we found out, or we didn't find out, but we're most likely speculating that UBS is using it as a hedge against losses that they acquire from GameStop pushing to the upside. And so I've been obviously buying in these levels, went as low as 84 cents a couple of days ago. This morning I was up right when the pre-market opened. This thing was trading at $1.53. So this morning it was up 33%. It is down today. Obviously, with some of the news, it's down 7 cents from where it opened. I think it opened at the hell did this thing open? I don't know why it's saying that it's only down 7 cents. It looked like it opened at 137. So it'd be down a lot more than that. But this is what I'm looking at here being a possible play where UBS eats shit. They're probably going to want this thing to go up. Again, the fact that we're seeing volatility shows that there's a lot of buyers. I was looking at options for this thing yesterday, all over the board. Like, it was insane how some things were like 238 a contract. So obviously $238 for one contract. And it was so out of the money in such a short period of time that it was like, it made no sense why anyone would buy this. But it was more expensive than the lower strike prices. So there's obviously a lot of gambling going on around here. And the fact that every morning open, it's a lot higher. No news really. Earnings in 26 days. I think this is just a huge hedge from people who know that something is coming down the pipe. Again, GameStop yesterday had one of the largest orders, I think $33 million right before the market close. Like, there's just people buying these things when everything else looks like shit. It doesn't make a lot of sense. But if you have been paying attention to the Roaring Kitty lore, I think it does make a lot of sense too. But yeah, I think this is going to be potentially something that could be a really good squeeze when the entire market is coming down. Maybe this is something that also helps get some of that QE into the system, because GameStop can honestly bring down everything. I'm not saying it will. I don't know if they'll let it, but I do think that there is a good chance that we could be looking at in the near future pretty good gains. Again, not financial advice. All right, let's see here. What should we go into next? You pick.
Let's go into Bitcoin. Let's start with Bitcoin. It's got a pretty interesting range that it seems bound in on the daily.
Yes, it does. All right. So I got it pulled up. What do you think, looking at this chart, and say is the next move? Do you think there's another leg up higher? Do you think it's going to just trade sideways in this range like you're saying?
So I see two potential scenarios here. I think we've been really tested in the 92.5, 93 level a lot. Like, it seems like every time we head up to 95, we're going right back down. And so I'm thinking they're trying to set a line of support here by continually testing it. Now from there, I see kind of two potential scenarios unfolding. I think that support doesn't hold and we start to break towards 88, and that seems to be where the true support is. And then from there, we leg up and start potentially pushing towards a new all-time high, looking like 100, 110 with the big marker being like 109.5. We break that. I think we start shooting towards all-time high. The alternative scenario is, the support gets found here in the 92 to 94 range. And, people see good reading from Fed, Bank of Japan stay strong. Because we were discussing pre-show, right? There's been a lot of reliance on if CPI and Fed kind of have a similar reading, you can predict which way the market's going to go and catch a good scalp. So, I think as long as we maintain at least like a semi-positive or at least just a no death news, like Trump doesn't say anything, China doesn't say anything that, heightens tensions in the trade war, I think people are really looking for a reason for it to go up, and they're just kind of waiting on that calling sign. The golden bull run, the meme coin super cycle that ended much faster than everyone thought it would. I think people are clinging for a reason for that. But also, right, we've been looking at these ETF inflows in Bitcoin, and they just have not stopped buying, right? There was like a week or two where there were a lot of outflows. People are like, is this it? Are we done? And then week or two later, we're so back, net 250 to 500 million ETF flows daily or inflows daily. So I think, barring any sort of major negative news coming from either the Fed, the Bank of Japan, PCE or CPI reading, Jay Powell, Trump, and Z, I think those are, a lot of things to watch out for. But that's if I had to keep my eye on just a core group of things, those are what I'm watching for. And I think that the direction of their language impacts, do we take a retest down to 88, 84, or do we just go straight back up?
Yeah, I think everything you said is completely valid. I'm interested in, and again, I'm thinking historically, given what Bitcoin's been through, is there a way where Bitcoin, because I do think it's going to 110K. That's my personal opinion. I have no position on it whatsoever. I think it's going to 110K, maybe a little bit higher. And then is there a way that it peaks before everything else, like in TradFi, and it peaks June or something like that? And then you just see this to start slowly bleeding a little bit of money since, obviously the dominance is going to be so high, and you see a rotation into the small caps.
Yeah, I mean, I think you could definitely see that, right? Like when you look back at when we hit all-time high a couple months ago, there was almost no liquidity on exchanges, right? The volatility was getting massive, where like a single 1 to 2 Bitcoin buy would push the price heavy. And you were seeing that on a lot of coins, like Barachain, just to name an example, because I was watching the chart when it happened. In a 1 minute candle, it went from $3.70 to $8, right? Because people were just trying to literally buy whatever they could get their hands on because everything was pumping like crazy. And, this wasn't just like a solely Binance, a solely Bybit issue that was fragmented to one SEX or DEX. Every SEX was clamoring to get their hands on more ETH, more Bitcoin, more SOL, right? So I think that's where the kicker comes in for if you want to paint a scenario that Bitcoin tops before everything else. It's just because it hits a supply shock and because of like the true limited scarcity that Bitcoin actually has, right? It's getting expensive. SEXs are losing it. And it's like, hey, we got an extra 93.8 lying around to, just restock up. That adds up fast, right? 10 Bitcoin's $1 million. If you want to have thousands on there to keep your exchange volume going, if people are only buying, you're going to run out, and you can't just be like, hey, let's just borrow some more Bitcoin. Like, no, there's not really a lot of underlying derivatives that people are actually going to trade on outside of like CBBTC and maybe like TBTC now that people are getting upset about Wrapped Bitcoin switching their underlying backing. So probably a little bit too deep there and too nerdy. Like, yeah, I think you could definitely make the case for Bitcoin peaks ahead of TradFi, and then we see TradFi and the rest of crypto following.
Yeah, I think that we're probably going to test these 50 and 200 moving averages. And again, that's the only reason I have for this. It's not because of any of the technicals or anything like that. It's more of if something bad does happen with the BOJ, you get some bad news. I think it's going to be short-lived, to be honest with you, but it might be pretty, volatile for some things. Bitcoin, maybe not necessarily. Maybe Michael Saylor does more convertible bonds and pushes the price up from the 50 moving average. And again, this is a guy, too, who I think is going to be synonymous with Bitcoin's rise and fall. And I'm not saying Bitcoin is going to zero, but I do think that there is a really good correction coming down. And I think a lot of it is going to be the unwind of MicroStrategy or strategy, whatever they're called now, because he is doing the worst possible DCA into this, where the lower it goes, he's screwed. Or if he runs out of debt, he's absolutely screwed, right? So I think he's going to be able to push it up a lot higher, in my opinion. And I think we're going to get to that top. But as debt in general across, not just crypto, but TradFi and global debt just comes due in, Q3, at the end of Q3 towards Q4 ish, you're going to see it be harder and harder to push some of these prices up. And you'll probably see liquidity being extracted from some of these things, thrown into maybe some of the smaller caps. And, at a point where everything bad just hits the fan at one time, a lot of those things could just liquidate, and a lot of those nodes could just go bad, and people just absolutely like recall shares or whatever it is that they made those deals with. And you could see the value of a lot of these things drop fairly significantly. But I do think right now, this thing's probably going to go to 110, like you said.
Yeah, I think, I'd agree with you, right? If you look at the 50 MA, I think that kind of lines up with the potential retest. And then, the 200 EMA, or excuse me, the 50 EMA running at the retest of kind of the current range. It's a little bit below the support line that I have drawn, but I don't think it's unreasonable at all to drop there. And then, that kind of first scenario where we get the drawback before the leg up, I think that aligns pretty evenly with the 200 moving average. So, yeah, I mean, I think either scenario works, and it's really just dependent on the macro environment at all. I think, now so more than ever, we're starting to see a little bit more intertwined movement between macro and crypto. And this, really started kicking off once we had a lot of the institutional barriers to entry lifted, starting with ETFs. And now, the latest guidance, the Fed removed their guidance of banks not being able to, have crypto. So we're starting to see all these things that, 5 years ago, even 2 years ago, right? Bitcoin and ETH could move entirely independently of the macro environment, not entirely independently, but have a larger variance than we do now. Like now, if Trump says something, if Xi says something, and it's impacting the macro, you're going to start noticing those outflows on ETFs and just your retail consumers more so than you would the classic crypto hodl the line, right? We're in this forever. Right. My buy wall is the strongest buy wall, and I will defend it against all gods and masters. No more Kobe type shit.
They're going to really wish they sold Doge at 70 cents. A lot of these things it's going to be that scenario too, right? I don't think retail is probably going to be the last ones to sell, because they're going to lose their job after the market's already dropped a significant portion. Just something that we have to be looking forward to. I got Bitcoin dominance up here real quick. Things climbing. Looks like fucking gold, to be honest. It looks like the gold chart 100%. Don't think it's done. I really don't think that Bitcoin dominance is done. And this maybe coincides with what we're saying, close to that top range for a new all-time high for Bitcoin. And then with 70% or so, maybe you start seeing it pull back a little bit, going into some of these other alts, other things. Next thing you know, bad news hits the fan. Dominance is still fairly high. You could see a wash. Again, this is a good thing for now. Could be a really bad thing down the line. Dominance being so strong, a lot of these pairs, especially if Bitcoin starts dropping extremely fast, and trading pairs just go absolutely wonky. It's possible. I don't know why I said wonky, but it's possible.
Hey, good word. Something to pull out of the source every now and then that'll catch people off guard. But it's like, hey, I haven't heard that one in a while. Might add it to the repertoire.
I sounded Mormon. I just didn't want to say like a bad word or something there. I don't know why I censored myself. Let's see. Anything else you want to look at in the crypto front? We're going to finish obviously with Fartcoin, but anything?
Yeah, I think Fartcoin's what to look at this point.
Yeah, I mean, fuck, 6.42%. This thing's gonna make me regret all my life decisions. I really wish I bought it when I saw that cup and handle. I was just like, yeah, maybe it does. And I was dead right. And this thing's a fucking a missile going past the moon. It's going to Titan. That's how far. Different planet's moon. But looking at it here, it's finding probably going to some resistance up at this level here. The all-time high is what, 123. I do think that there is.
I know the all-time high is like $2.70.
I'm so stupid. I'm at the yearly high, or not even the yearly high. I mean the recent high,
local high. Yep.
The local high. Tweaking. But yeah, I think that there is an ABC corrective pattern or some type of XYZ or something, WXYZ or elemental P, something coming down to this, this trend line or this 50 moving average. which personally for me, I'll probably be buying somewhere, south of 80 cents, north of 60 cents. I'd be happy accumulating in that range because as you and I were talking about before the show, I think this thing's going to go for all-time highs, and maybe a little bit higher. See, the thing is the market cap is so small right now. I don't even have it on here. The market cap's not even on, it's not even on, what do you call it?
Trading view.
Almost called it TradFi. I'm fucking losing my mind, dude. Too much today, looking too much talking. But yeah, I think this thing's going a lot higher. But we need full degen season, which would be Fart Girl Summer.
Yep. Yeah, no, like it needs to be complete risk on mode. Like the relative strength of Fart Coin, as everything has been chopping and dipping, right? I think it's really only comparable to like SWE maybe, which has been just outperforming everything alongside Farcoin, and Bitcoin too, right? Like Bitcoin is upheld while ETH and Solana have had their jitters, but Farcoin honestly is very, it really impressed me. Like I was at the point where when it hit like I think 30 cents or whatever, I was like, okay, it's probably done. It's a good meme, right? Now that it's back, I think it's like, I don't think it can go away, right? I think that was probably like the last low, and it was the lowest it'd gotten since it really started trading. And I think, it's a complete left curve, right curve thesis, no mid curving here. Farts are funny. That's the thesis, right? Like you can't be in a scenario where a fart erupts and you're just like, and no one there laughs, or even if you don't laugh, you don't like chuckle internally, right? Like you could be at a funeral, someone's given like the speech, the obituary, and they just rip a loud fart. Everyone in that room is cracking up laughing. I don't care if you were in tears, you are holding in tears of laughter, right? Like there's no such thing as a fart that wasn't funny. Farts are universally known too. Not everyone knows Doge or Shiba, right? Not everyone's been introduced there. Not everyone knows Pepe, right? And so it's like when you have to think of like, and I can't believe we're discussing this on a show like this, when you have to think of like the mimetic energy behind some of these memes, as well as the Lindy effect, where the longer it lasts, the more staying power it has. And I think that's a very real thing with memes and crypto, right? It's because these are such novel, often experimental ideas at the onset. The longer something stays around and holds its mind share as well as its price, I think it's harder to deny its long-term success. And so like when you look at memes like Doge, Shiba, Floki, Pepe that have really hit it big and gone far, none of those at their onset were as mainstream as farts. And typically with memes, it's not something mainstream that makes it, it becomes mainstream over time. So the fact that, at least from like a narrative perspective, right, it was generated by an AI and the AI thought farts were the funniest possible meme you could come up with, like I kind of stand by that. Like I was a hater at first just because I typically don't like meme coins. I like to extract liquidity, get in, get out with them. And that's what I think their best use case is. Oh shit, I've been using my D&D name this whole stream and didn't even realize it. But anyway, yeah, I think, at this point, and like, it's hard to get these words out of my mouth and sound serious. Like, I would be remiss if I did not have Fartcoin in my portfolio at this point. I probably bought too high. I started buying recently around like $1.09. But yeah, if we get that pullback to the 78, 85 cent range, I will be packing my suitcases full of hot air and just watching it rise over Fart Girl Summer.
I'm really hoping, and again, this is like this. I can't wait for all three of us, you, me, Jweb, and obviously anyone who watches our show, to be interviewed by Michael Lewis for The Big Short too. And just him to like look back at this stream and be like, "Oh,
do you have the tweet handy that Jweb sent from D-Train 22?
Oh, the Vlad one?
Yeah, I think we got to pull that up as a wrap up. So, for context, D-Train is probably one of the most legendary meme coin traders I've ever come across. Which, again, words that sound weird coming out of your mouth, but this guy, he seems to just understand the narrative and foresee it before anyone else. So early Fartcoin guy, been preaching hot air rises since the coin came out. And this is just, this is a piece of art. This isn't just a tweet.
Yeah. He
gives the whole shill of why he lost trust in Robinhood, will never use it again, and turns it into, but I will. if you list Fartcoin?
It's coming. I mean, let's put it this way. I know Vlad responded. Here, let me see. I find Vlad's
Yep.
response.
He just responded with a laughing emoji.
Yeah.
But that's how you know, right? If it's getting his attention, they've been listing crypto a lot more recently and kind of been leaning into it, making it more accessible. I think the next step is some of the more prominent memes to get whitelisted. Right? Because it is a consumer facing platform. You're not going to have institutional guys looking like, they listed Fartcoin? I can't deal with these people anymore, right? Like the people that I know that use Robinhood primarily are younger investors. So most of them aren't opposed to the idea of having a Pepe on there, having a Doge on there. So what's a Fartcoin to add on there, right? Who doesn't see Fartcoin and laugh as soon as they read it to themselves?
I know. A room full of Germans. Outside of them, everyone in the world probably finds farts extremely funny. Again, I don't know. That was that. If you have friends that are from Germany, you would understand that joke. They just are very very serious people. Outside of that, I think Robinhood is going to be the first one to list Fartcoin out of any of the major centralized exchanges. That's my personal belief. The fact, like you said, that Vlad came out here and said so. Not said so, but he was laughing his fucking little emoji head off in that thing. Fartcoin's coming.
I'd say either Kraken or Robinhood. Those would be the two that I would go with. Kraken seems to be really focusing on like a Robinhood-esque model of making stocks and crypto accessible to everyone, partnering with some European neobanks versus Robinhood's doing the reverse, right? Obviously a little bit more prominent, started with stocks, now tilling into crypto. So yeah, whoever wants to list Fartcoin, I'll love you, whoever lists it first.
But please, wait till after we've packed our bags.
Yeah, don't do it now. I mean, I'm not getting 1 million tokens at this point because I don't have $1.2 million to my name, but I want as much Fartcoin as I can possibly stack before it gets listed.
I'm really hoping that GameStop, FFAI, that whole shit goes up, because the two things that I want to be buying at a good value, Fartcoin and oil. That's all I want. I want to be a Fartcoin and oil investor. I think that'll take us to the promised land. Yeah, I mean, I can't believe I'm saying this. And I remember last year when you were talking about memes, like memes are the future of investing, and I was like so mad. I was like punching my fist. I'm like, I hate memes. Everything they're just, it's just liquidity grabs. This is Binance bullshit.
No, they are, but right, like at least with the current crowd
agree.
in crypto, everyone wants volatility.
Yeah.
And they want to just treat it like the digital casino of, okay, I'm either losing all my money or I'm making $1 million today. And then you obviously find some in between ones that have staying power, like Fartcoin, right? Where it becomes, it's a Ponzi until proven otherwise, right? Where the insiders have the opportunity to get out first. But now that it's got so much staying power, $1 billion market cap, it's like, okay, probably not a Ponzi because or not at least a full extractive event, because you've got early holders like Doug who they're just like Fartcoin, LOL, and just continue to buy more at these prices. So
yeah. That being said, I have nothing else to say. I think I'm all out of farts for the time being. But
I need to cleanse my brain after this conversation, the way it ended.
Well, here's the thing. I feel like we had such a really good conversation to start. Like we were just talking like big picture macro stuff.
Yeah.
And next thing you know, it's just like fart this, fart that. Fucking
hot air, man. It's getting to us. It's getting to us.
Hot air rises. All right. We're going to call it there. Thanks again, House, for joining me today. Hopefully Jweb spoiler looks really nice with his what was he going to get tattooed on his ass? Hot air rises or Fartcoin? Yep. He's going to get something tattooed on his ass. That's what he was talking about last show. He's going to look absolutely wild out where he lives with all that. But I hope Fartcoin pulls back. That's it. We've got nothing else. We're not financial advisors. We will be possibly back Friday, maybe not. Depends, but Monday for sure we will be back one way or another. So thank you guys for watching. Chris, everyone else who's joined us today. We will see you all next time.
Take care, guys.